Welcome to the podcast. I'm here with Arlene Gill. She is the broker owner of Net Lending, your lender for life. Welcome to the show.
Thank you, John. So happy to be here with you today, finally, after a few months away.
Yes. Well, let's get started. All right. So, Arlene, you do non-QM loans. Tell me a little bit about how you got into non-QM.
How I got into non-QM loans. It's actually kind of it's a bit of an interesting story. It was in 2013. I had a client, actually a friend more than anything, acquaintance, reach out to me asking me, "Hey, Arlene, you're a mortgage broker, right?" I said, "Yes, actually I am." We knew each other more than anything from school. And this poor man had immigrated from South Africa with his family a few years prior to that. Very well-established attorney. And he moved here from South Africa, and even though his income was substantial income, on paper he was reflecting a loss of, if memory serves me, I don't know, maybe about 45,000 negative every single month. So he had been to 5 different lenders, and not only did he, waste a ton of time, he still wasn't able to purchase the house that he was living in. He had been living in that house for about 3 to 4 years, and it was perfect situation for his family, and he wanted to purchase that house. So at that point, I was able to help him. It was a very difficult loan. It took us about close to 90 days to get it closed, but after going to 5 lenders, the client was more than happy. Because in the end, he got what he was looking for. The end result was finally being able to purchase here.
That's great. So you kind of saved the day.
I think he was happy. Yeah.
Yeah, that's great. That's what I love about non-QM too. Is they don't always take 90 days, but sometimes when they do, and the borrower is just so grateful, a lot of times they refer you business. They become kind of like an evangelist about you as a broker, and they're like,
Right.
"You've got to try Arlene, or you got to try,
Absolutely.
this lender because they got me when no one else could get me a loan." And so it really shines, when you can get these kind of loans done. So I love that.
Absolutely. And no, non-QM loans never, ever really take 90 days. In this situation, there was a lot of moving parts where he was selling a business here, as well as a business where he was originally from. So there was just a lot of moving parts. Funds coming from Australia that we had to source. So there were a lot of moving parts, which complicated the transaction. But in reality, non-QM loans always close in 30 or less days. Yeah.
Absolutely. And so how did you find that borrower? Was it a referral to you, or?
That borrower specifically was kind of an accident. He was so frustrated. He was kind of like just swimming uphill.
Calling all different people.
Right, exactly. And again, he was an acquaintance, and he became a client for life.
That's great. Well, that's good when you can get it closed, and they usually are happy, so that's good. What are some of the challenges that you've faced with non-QM, and how has that evolved maybe over the last couple years that you've been doing it?
The challenges sometimes are when you have to explain to a client why their rate is slightly higher when they have a substantial amount of liquid assets in their bank accounts, when they have a 780 plus FICO score, when they're putting 25% down.
Right.
They don't always understand why. Why am I not getting that, that rate that I see advertised at my bank when I
Quicken or whatever? Yeah.
Exactly. Well, because they won't be able to do that type of financing. It's two different worlds altogether, the traditional and the non-traditional.
So how do you usually tackle that question? If they're like, why can't I get a 2.75 rate? Like, how do you usually answer it?
Typically, it's a simple explanation. We're not going the traditional route. We're not using your tax returns in order to qualify for this mortgage. Whereas typically, any of these institutions that you see these rates advertised would, it's the first thing they're going to ask you.
Right.
This is common sense underwriting versus, this
Fitting
little
in the
box.
box,
You fit in the box, wonderful. You don't fit in the box, little hair outside the box, you don't get a loan.
Yep, that's good. Yeah, I always like to kind of add in there, if you were W-2'd, right, and you were paying all these taxes every month and you weren't able to do all
Exactly.
these write-offs, you'd pay a lot more in taxes, but you would maybe save a little bit on the interest rate. So what would you prefer? Would you rather pay more, if you could compare apples to apples, would you rather pay more taxes and get a little bit lower rate? Or would you rather save on your taxes and enjoy all the perks from as an entrepreneur or as a self-employed person or someone who has assets only, or versus someone that just is a W-2 job? That's kind of how I approach it usually. But I think there's so many ways that you can do it, and usually they kind of they come around, right? You kind of have
They
to.
do.
At first, they're like, it's not fair, but once you tell them the reasons behind it, usually they'll get it. If you do a good job, right, they do.
And I find myself having that conversation very frequently and breaking it down for them as, well, if we were to go the traditional route, this is the tax implication that you
Yeah.
would have. And none of that is going to your equity, to your home, right?
Yeah.
Whereas if we go this route, everything's going into your equity, into your house.
That's right.
And they
yeah.
understand that very quickly. Once you bring up the tax implications,
Yeah.
they
Yeah,
get it.
they know why they're, and most of them, I think entrepreneurs in general, really enjoy that tax break, right? Like they get to write their car off, they get to write off all these other things. So that's a benefit for non-QM, and that's usually what we deal with, a lot of self-employed borrowers and all that. So one of the cool things about non-QM we talked about is you get referrals, right? So when you do a non-QM loan for one borrower, often they'll tell their friends or family, other people that they know that are like peers, like other entrepreneurs, other business, self-employed business owners. But we were talking earlier about how do you get in with just a few of them first. And so I think some people who do a lot of agency or government loans, they're so used to the W-2 borrowers, they're not, they don't really know where to find some of these self-employed borrowers, right? So do you have any advice to kind of give to other people maybe watching that would say maybe I should try this strategy to find some self-employed borrowers or business owners? Like anything you've done in the past that kind of stands out? Do you have a marketing piece, or do you just network with people? What's been something that maybe has worked for you?
Networking, definitely. I think financial planners and CPAs are the best route to go if you want to break into the non-QM arena. They're typically the people that know exactly how people's finances are structured and who can benefit from a non-QM product versus a traditional agency product.
I've gone as far as just going to a happy hour or lunch with an accountant and just telling them about the product, and they're like, what, this exists?
They didn't know.
They have no idea.
Right.
And then they can think of, I just did Mr. Jones' taxes or Mrs. Smith's taxes, and now they can go back and you should probably do this. I know you have, either you paid cash for your house and now you can leverage it, or, you did this or that. And now they're stoked because they can give a referral to, their client, and then vice versa. And you, especially if you do your taxes with a good accountant, then sometimes that's an easy way in. Get a good accountant.
Right. Many of these loans are really created around conversations. I'll call them table conversations. When people start to share, I tried to do this, but I can't because my taxes are structured in such a way. Well, that is kind of like a little, red light.
Yep.
To ask more questions, probe for more questions, and that's how I have found a lot of non-QM business.
Are there any other ways that you might get non-QM business? Do you do any marketing? I know you talked about being very pro marketing, maybe web, in a net lending. I don't know if that has to do anything to do with the internet, but do you ever put any net web marketing out and Google ads or anything like that? Or is there any other thing besides just sort of, back and forth with people, face to face, or is there something else that works maybe?
I think nothing works better than your last client, and I know that a lot of people don't want to hear that. They want to hear that there's a magic answer, there's a magic, a little switch that you can just turn on and off and business pours in. No, I wish I knew, because I would be flipping that switch too.
So start with one, right? You could start with one client, and then hopefully that
And
that'll be like,
maximize that client.
Right.
You know, give them the Nordstrom experience. It's just like FundLoans is always giving me, you know, the Nordstrom Neiman Marcus experience, like I
Right.
was telling you. And that's the best way to market yourself.
Right.
Your work should be your marketing piece.
right. Yeah, because people do like to tell people about when they get a good experience, right?
Of course.
And they tell people when they get a terrible experience. That's
Oh,
just,
that one's going to go even further.
Right.
Yeah, that's going to be a huge marketing piece if you don't do a good
yeah,
job.
you don't want that.
No, you don't want that.
So you're kind of saying what you look for in a non-QM lender, but is there anything else that you look for, like more product, or like what do you like about non-QM lenders? Like, was there something that stands out that you look for?
What I look for in a lender is what I have found in FundLoans, which is responsiveness, product, variety, competitive rates, incredible service, honesty. I always know where my file is at when there's a problem. Immediately I know. So I know how to navigate. And when you know how to navigate, you have better control of transaction, and you're able to provide a much better experience for your client, which then translates into additional business.
That's good.
And that's how you grow your business.
Kind of goes back to what we were just saying,
Right.
too. Have you accessed our text message alerts yet? Did you
No.
know about that?
No, I didn't know about that.
Dave.
Dave.
No, we rolled it out a little bit ago, but we've been testing it. So if your loan gets approved, or when it gets approved, and when it
Oh, wow.
funds, you get a text message. So you know as soon as the funder hits the fund button that your loan funded. It's amazing. So make sure you ask.
Technology.
Make sure you
Yeah.
ask Alex about that later. Yeah, like a favorite failure you might have.
Yes, so definitely we all have failures that we can learn from. Failures are the best things to
A
learn
great
from.
teacher,
Exactly, a
right?
great teacher. I got started in this business pretty young, at 25, and the way I saw my business, the younger me, was like the agency loans, very transactional. You know, get this client,
Make your
we're
commission.
done, make my
next.
commission, goodbye, next. Exactly.
Right.
And I did very well, quickly burned out, and I left the industry before the crash, before the meltdown. I left December 2006.
Okay.
And I decided to follow my passion. You know, they say follow your passion, follow
I
your
did the
passion.
same thing. So
Right,
we'll,
yeah.
We'll swap stories later, but keep going.
So my passion, animals. And I moved to LA. I took off the business suit, which, you know, we all wore business suits back then. And I put on the beach bum dress and my flip flops. I leased a house in Manhattan Beach, and I took my kids with me.
Nice.
Literally moved like from one month to the other. And I created a dog grooming line, which I was
Nice.
very proud of. The first USDA certified organic line in the country. Yeah.
Nice.
So I was able to get it into all the Petcos across the country, and was doing phenomenally well. And all of a sudden I was bought out. My shelf space was bought out by a huge company,
Wow.
and my business was dead. Literally, like almost from one day to the next, it was dead. Got depressed. We all have to go through that. Got back up, you know, a week later, and I said, well, what do I know how to do?
Yep.
You know, so I went right back to doing mortgages. But this time, I found myself, after I was, you know, beat down, went through my failure, I found myself really having a different approach to my business. And that's how, you know, your lender for life came
That's
to
cool.
be. Because now I'm very much vested in each and every one of our clients and their financial future.
Yep.
And that has given me a very different perspective and motivation to help my team, build my team, grow my company, and help people.
That's cool.
Really help people.
I mean, at the end of the day, that's kind of what we're doing. It's rewarding, right? When we help someone,
It is.
when they close on their house and they get that new house and they're so happy, and or you saved them that money, or you gave them that cash to build their business, or whatever it is. We're doing something that's rewarding, right? And so I think
It is.
that's amazing to hear that, you know, that has impacted you and you learn from those things, and now you're just continuing that, and that's a great thing. So I know you're going to have clients for life. I'm sure you already do. So, well, that's the end of the podcast. Please like, share, subscribe. Also, comment below if you have any questions for Arlene. Reach out to her. If you're looking for a loan, you can always call Arlene, right?
Oh, always.
She'll take great care of you. Maybe she'll send it to FundLoans. We'll see. But thanks for joining, and we'll see you on the next podcast.